So what is project finance risk? What is risk? Risk is simply the possibility that a stakeholder, particularly a lender or a sponsor, may suffer financial loss on a project finance venture. Now, banks are sometimes criticized for being excessively risk averse. Look at it from the bank's point of view. The banks are very cautious to advance capital and are risk averse in part because of the fact that the banks themselves are highly leveraged. The bulk of the capital they are lending out is not their own money, it's depositors' money or money borrowed from third parties. So the banks are very, very careful as a result of this. And the banks also want to take lending risk. They are prepared to take the risk of lending a project money. What the banks don't want to do is to take on equity risk. That is the risk that the venture will succeed or fail. The banks do not want to take on equity risk or to extend credit primarily based on the strength of the underlying business case. And that's why banks tend to be very conservative. Now, this frequently results in a tension between the lenders and the sponsors. Each of the mindsets is very, very different. The banks want to ensure that they'll get back the capital they've advanced as loans to the project company and that they'll receive their interest over the life of the loan agreement. The sponsors, on the other hand, are looking at an internal rate of return. They're looking at what they hope to generate on the underlying project. They are a lot more entrepreneurial on this venture. Those are very, very different risk profiles, very, very different risk perspectives. All the stakeholders in a project finance venture will want to ensure that all the risks have been identified, that they've been dealt with. This is what we call the risk management process, and it's intense and it's protracted in project finance. If risk can be identified and analyzed properly, it means that from a stakeholder perspective, you should have a much better understanding of the project and how you can improve performance. And if risk can be identified and mitigating measures can be put in place, you can prevent these risks from crystallizing into a loss for the stakeholders.